in terms of the conversations we're having with investors, 70 to 80% has been on green metals. It's just been such a strong interest. It's been a lot of education because a lot of investors who have stepped out of energy, have stepped out of, utilities for a while during the growth phase, kind of look at this precipitous run up in prices, and they're sort of like, whoa, is this really sustainable?
This is how companies are thinking now. They're thinking about creating circular economies and taking the reins of their own supply chain.
We're not just talking about EVs and electromobility. There's a huge chunk of the demand that's going to come from ESS.
We're going to be kicking off today with a session on the energy transition. We're looking at many of the challenges and the nuances as to how the world, and particularly the USA, as we're here, will be adjusting and moving and accelerating towards the energy transition. And we're going to be looking at the metals and the minerals, but also the downstream elements that are going to be required to achieve these decarbonisation goals that have been so rigorously set by our politicians and by our society and by our media. And so I'd like to welcome to the panel Veronica Zhang, who's Deputy Portfolio Manager at Van Eck Natural Resources Equity Strategy, Erez Ishalov at Traxys Battery Holdings, Kimberly Berman, Director of Equity Research into Special Projects at BMO, and Adam Melnick, who's CEO and Director of Zacapa Resources. So thanks a lot for joining me on the panel, everyone. I wanted to start off by framing this around some of the sort of themes that we'd touched on actually in the session yesterday when we began. How are some of the global macro headwinds that we're experiencing at the moment, particularly the slowdown in certain economies, some of the risks that are going on there, the inflationary environment, the impacts that's going to have to OPEX on projects as well. How are some of these factors playing into the energy transition? And how have certain regions, or perhaps we could start focusing on the US, how has the US experienced headwinds from these factors, slowing down or indeed accelerating the energy transition? Kimberly, do you want to start us off?
Great. I get to start. Thanks, Adam.
Yeah.
Yeah, it's been very, very interesting in the markets just because of the fact that, with nickel, having those problems with, dependency in Russia and things like that. And, the policy in the US is actually kind of slow in a lot of ways. There's a lot of battery engineers that have been trying to get funding to, advance some projects for a very long time. And now that's only starting to sort of make some headway. But one of the things that is very, very interesting is that it depends on the state. And so, we've done a lot of work in the fact that, Tesla is a homegrown story. It should be, EVs should be the gangbusters here. It shouldn't be like 10%, of the market, the global market. And, Germany is fast tracking getting all those battery capacity up and running. So, the US is going to catch up, but it's definitely late to the game. And so the commodities side of it is going to have, securing and deglobalization of supply chains is going to be key.
Yep. Okay. And with the metals and minerals squeezes that we're seeing in terms on the supply side, is that slowing things down, perennially? We know how long it takes to sort of bring a lithium mine into production, for instance. Is that going to be slowing things down, or indeed, our panelists yesterday seemed to think that some of the squeezes in the higher prices that we're seeing in metals are actually going to accelerate the energy transition?
I think that it takes time to build EVs and build the capacity, and the capacity is not online yet. So I would see acceleration happening when that capacity is finalized. I mean, Germany, for example, has about 20 different battery factories that are being built. Tesla just opened their European, production, which was like long overdue. And this all takes time. And so securing battery metals, the offtake agreements, absolutely is going to accelerate that aspect of it. But then you have, the capacity that needs to be in place. And so there's definitely a push and pull.
Yep, certainly. We can come on to some of those offtake.
If I can just also
certainly.
add to that from the demand side, what we've kind of seen is, obviously there's a bunch of announcements about capacity coming online 2023, 2024. That gets all pushed to the right quite a bit. And not only that, nameplate capacity and what's actually coming online the initial first couple of years are vastly different. But the other thing that, we're kind of trying to figure out from the investment side is how companies who used to have a budget of 600 million for, let's say 5-6 gigawatt hours is now looking at that same number to be like 800, 900 because of raw material and inflation issues. So when you kind of back into the math and you kind of look at the IRRs that these companies want to get on these mines, these gigafactories, it's kind of like, do you push it to the consumer? Do you wait? So there's a little bit of a discussion point that we're kind of trying to figure out over there.
Yeah, because the gigafactory build out time is so much smaller than the build out time for a mine, for instance. Yeah, interesting. Erez, can I get your comments on some of that as well?
A narrative that we've been following in recent years is that the supply side is not answering quickly and robustly enough to the demand, which I think is probably still very true, especially if you take into account the long timeline from discovery to actually commissioning and producing on the upstream. Add to that there's a lot of missing conversion capacity, which we were hoping would develop as regional solutions, and they still may, and that still may happen. But there is this, time gap on the demand side as well, and this sort of inherent gap between announcements and actually commissioning a cell manufacturing facility, meeting its installed capacity, and having less than 30% scrap in process, and normalizing to the kind of standard 5 to 10%. So perhaps this curve or the slope of acceleration on the demand side would be a little bit more moderate and stretched along perhaps more time, which on the positive side, I think it will allow the supply side to provide a better solution. And perhaps the crises that we were thinking of were basically, there will be a lot of orders, but there will just not be materials to produce them. At the end of the day, if you don't have the cells, then you just you can't build the cars and you can't sell them, and you can't install the ESS units and enable the transition to renewables. So perhaps if you take a step backwards, maybe everything will just be a little bit slower. That's sort of the big picture here.
Are we at peak EV sort of sales penetration at the moment? Do you think that it's going to tail off a little bit?
I think in terms of
because of the materials,
educating the consumers and getting people on board, to realize that the total cost of ownership of an EV is actually better. That these are much better machines. That even if you charge them with a grid that's not 100% clean, you still have cleaner cities and a quieter environment and less lung cancer. And there's a lot of positive in transitioning to electromobility, even if it's not that perfect solution where you're down to 100% zero carbon footprint on it. So I'm optimistic, I have to say.
Do you see the price point of an EV coming down though to reach the mass market and really have an impact? I mean,
it's going to take a while, but don't forget we also have LFP, which is an answer. And as we transition to mobility as a service and to ownership by fleets and operators, at least in urban environments, and less sort of private ownership of the hardware itself. And I guess in our world we're switching to everything as a service. not just mobility, but mobility is a good example. And if you're going to have swarms of autonomous, last mile type of solutions, at least in urban environments, why can't it be LFP, right?
Yep.
That's true. And I was just going to mention that LFP. One of the things that people don't understand about LFP is that it was, created in University of Texas, and it was raised at, in Quebec with Hydro-Quebec, and it has a very complicated patent position, and those patents are now going away. So, probably in the next year or so. So there's a really huge chance. There's a lot of people, smart people, who are looking at what has been done in China and bringing that here. And Elon Musk has already said that. So it's sort of like he's going to bring those Chinese cars, LFP, to the US.
And we're seeing some startups. We're seeing on the TSX 901 is switching to LFP, and we see Mitra from Vivas Kumar, former Tesla guy, who has a very interesting startup in Palo Alto, focused again on LFP. So maybe this would be part of the solution.
Yep.
And just to add that, LFP also uses lithium carbonate, so it's not doesn't need nickel. It needs lithium hydroxide. So I just wanted to throw that out there.
Okay, that's great. As a sort of interlude, we've jumped onto a lot of themes. Adam, can I just quickly bring you in to introduce Zacapa and the angle from copper? We can't have any kind of energy transition without much more copper, and we know about some of the requirements globally in terms of 5 more escondidas required, etc., to sort of meet the demands that everyone's setting. But please.
Absolutely, Adam. It's a very exciting time in the copper space as well. And I'll actually adjust that number you gave. We actually need 10 new escondidas for the rest of this decade if we're going to satisfy and help close the 25% deficit we're going to have in the copper market, largely driven by the electrification and renewable energy scaling that is driving the rest of the critical metals and battery metals markets as well. So yeah, we're trying to make a big discovery in a mature mining district like the Southwest U.S. So that we can enable sort of the 100-mile diet for electric vehicles and drastically reduce the carbon footprint of our domestically produced electric vehicles.
Yep. Excellent. Okay, so keeping on the sort of electric vehicle theme then, but bringing it back to higher prices of the material inputs. And looking at sort of the scarcity of the metals as well, as we've mentioned. We've talked about, it being a sort of slower process and the innovations in terms of the battery chemistry. Are we going to see, further substitution? Are we going to see this myriad of different battery technologies rolled out in different locations around the world, sort of one for the expensive consumer with a higher nickel grade, one with the LFP for the sort of mass market and scaling in a more urban environment? Are we already seeing this, or is that simply just the industry reacting to what sort of supply is available out there?
Well, that's the plan. I think part of it is just bringing down the battery costs itself and the weight of the vehicle. A Tesla, just to back up a bit, one of the things is that you cannot change the chemistry without changing the battery management system and changing all of the other aspects you can't just overhaul the battery and have a new pack. When you produce a car, there's automation. The screw goes exactly in this spot. It has to have, the same, it has to be consistent. So you can't just change it overnight. And so when you even tweak the battery chemistry, you often have to rewrite the battery management system, and that takes time. And that's why you see a lot of the delays, like in Volkswagen even. They understood their technology really well, but it took them still a 2-year delay to get some of their vehicles out. So just to remember that this takes time. So once an OEM decides on a battery chemistry, they're pretty much stuck in that battery chemistry for at least 10 years, for the lifetime of the vehicle anyway.
Yeah. There's a scramble for offtake going on at the moment, really, in this sort of OEMs and automotive world, though. And we've heard lots of comments at our events around, funds, speaking with automotives, really trying to, and producing mines, trying to secure that offtake. I'm just really chipping away at this supply crunch challenge here. If they're locked into certain battery chemistries for so long, are we going to start to see some automotive firms fail, or or have to pivot very quickly in terms of their battery chemistries, or indeed supply contracts default, things like that?
I think that's a very good question, and it's really hard to predict.
Hard to predict, yeah.
Yeah, it's very hard to predict what's going to happen. They are locked into their chemistries. That's it. Tesla, you can see that they're basically going, making inroads in lithium and inroads in nickel, even though they're going LFP. And even when you go LFP, for example, there's a lot of training that needs to happen. So, and then there's also, problems getting phosphate, right? I mean, so you're dealing with another supply chain issue. So it is an alphabet soup of potential chemistries. So you got NMCA. Well, where are you going to still get the cobalt? Where are you going to get the nickel? That's what GM is going for. So I think there's going to have to be some catch up. The industry's been trying to get rid of cobalt, and now they have to sort of look at other areas.
In terms of price point, and when you kind of see all these minerals kind of walk up lockstep in terms of supply and demand shortages, one of the things that some OEMs have been trying to do is innovate on the pack to sell. And of course, that's a little bit easier for the likes of, large OEMs like CATL, BYD, because they have the CapEx to do that. But then, it's easier perhaps for greenfields also to look at other elements of what makes a battery and how to bring those tangential costs down. The cost of electricity, for example, in Norway is much, much lower than it is in the US. So if you're going to be building a plant in Norway, that brings down your total cost maybe 10, 15%. You're still going to have to bear the cost of the materials going up, but at least you can kind of bring down some other elements. So as we go into this, conversation around nearshoring and kind of diversifying outside of the main areas where, manufacturing is happening right now, those are some of the things that people are, I think, considering pretty strongly.
Yep.
So I want to support that, there's almost like, it's going to require sort of like in Japanese, a kaizen effort with, there's a lot of things that need to happen. There isn't just one answer, but, it has to be pushed and tweaked from all directions. And to some extent, some of the solutions are location specific. So just as an example, we were off takers with Nouveau Monde Graphite, and we were one of the early investors there. And the fact that they are based in Quebec and they rely on the hydro grid over there will allow them to use a thermal solution for their purification, which is, of course, much nicer and cleaner than a fluoride-based type of graphite purification. But besides that fact, it's very energy intense. But when you're sitting on the Niagara Falls and you're connected to Hydro-Quebec, then that's the optimal solution for that situation. So it's very much it has to do with the specifics. There is no sort of one size fits all and one solution. It's just a multifaceted effort.
Just want to add that that's why Tennessee is attracting all of these battery companies now. It's because of their hydro.
Yep, interesting. Well, on that point then, in terms of like harmonizing the effort, I think it would be fair to talk about the US and policy response basically to not just the energy transition, but the critical minerals challenges as well. If you think about US, China and the competition around wrestling some of that supply chain and the value chain back domestically, not only just in a sort of economic sense, but to help control the destiny of this energy transition. Why don't we comment on, where's the US at right now? Have there been some good policy changes recently? We know there's a Defense Minerals Act and a few things that have come in. But how impactful are they? How meaningful are they to our businesses? And is it enough indeed? Adam, do you want to comment on that, how that's impacting you as the mining company?
Thank you very much, Adam. I think this current administration gets a lot of flack for disabling the upstream, the mining side of this industry. And it's really interesting to see what's happening in critical minerals, how many projects are getting enabled at the federal level because they are viewed as critical to enabling the electric vehicle revolution and scaling. And I think the Defense Production Act is an important indication that this administration is not resting on their laurels. They are taking action while sort of protecting their ability to get reelected and maintain popular in the future, right? So it's a careful balancing act. I think it's very much project specific. And commodity specific at this point. Lithium and nickel, a number of these projects domestically are being enabled by the current administration, and important metals like copper that are crucial in electric vehicles in particular, and renewable energy are sort of being left by the wayside. But at the state level, I'm personally seeing a lot of momentum being built. The Congresswoman Lesko from Arizona has recently tabled an important policy that could lead to the permitting and approval of the Resolution Copper project that could boost U.S. copper production domestically by almost 25%. That was just in the last 3 weeks. So seeing the Defense Production Act come through and Unlocking America's Resources Act from Congresswoman Lesko, I think shows that there's very near-term momentum from both the federal and state level to see quality projects advance.
Excellent. And what about sort of the midstream and the downstream elements, tying it all together, sort of building refining capacity, things like that? Because China has so much of the refining capacity of rare earth elements, for instance. It doesn't matter where you mine them; they're going to go back there, perhaps to be processed.
Absolutely, Adam. You've touched on a very important point here about how essential it is to own the entire value chain. America used to be quite dominant in production of all metals, really, and they've kind of lost their confidence and have really focused on protecting the environment, which I think is extremely important. But it's one thing to enable the upstream and new mines to come online, but it's also very important, again, as I mentioned, the 100-mile diet for electric vehicles to drastically reduce the total carbon footprint of new electric vehicles. We need to be thinking about the midstream, how we're going to refine and smelt these metals domestically as well. And I think, the way the administrations are currently enabling lithium and potentially nickel projects and refineries and smelters in those metals could be extrapolated into metals like copper. There are only 3 copper smelters remaining in operation within the entire country. We're very much on the back heel and very much exposed to the global supply chain, which is under a lot of pressure at the moment. So I'm quite constructive on this country. I believe the engineers and scientists in the world, and particularly in this country, will help solve the midstream equation as well, and really protect this country and its economy from future supply shocks.
Yep, excellent. Kimberly, I know you're sort of presenting on this later, so maybe we won't divulge too much. Do stick around for that if you can. But yeah, does anyone else have a view on the sort of policy response and how the US is somewhat fragmented and what might need to be done there? If you could summarize that.
Yeah, so I'm actually talking about more renewables adoption, but so not necessarily EVs, but I think that the state legislation needs to be watched very, very closely because, for example, just to give those numbers out there, electricity generation is usually a crown corporation or a state-run corporation outside of the U.S. And in the U.S., it's 88%. Owned by the private sector, and state regulators basically decide their energy mix, and state regulators decide how that business is going to be run within its state lines. And then you also have regional issues with ISOs and RTOs and all that stuff. And so that's sort of what I'm going to be talking about. And to segue that knowledge into EVs is that, EVs are not sold in states that don't have sort of like qualitative and quantitative incentives. It just, the OEMs just don't bother. So it's very, very difficult to get like a Chevy Bolt in Utah, but you can get Tesla because Tesla's, does it their own way. Given that those types of incentives at the state level really need to happen at every aspect of it. So you've got Tennessee, for example, who's drawing a lot of battery companies, right? And so all of a sudden, you've got, Ford and GM, and you've got like all of these, and you got Oak Ridge National Labs is there as well. So it's like, okay, well, that's because they have cheap electricity and they want jobs. They want to bring jobs, and that's sort of, so you got to really look at what's going on the state level.
Okay. Veronica, can we zoom out a little bit and talk about Van Eck and your interesting role there and your environmental sustainability fund? Because I'm conscious we dived into the discussion, getting into the meat of some of the challenges, and actually it would be interesting to hear about your approach to sustainability, how you sort of define that, and the investments that you look at, which are obviously a bit more downstream from the raw material inputs.
Sure. So the Environmental Sustainability Fund was launched last year. It's a long-only strategy. It kind of touches along all the industrials, materials, and tech verticals you could think of. But ultimately, the purpose of the fund is to invest in products and services that actually have an impact on improving the environmental footprint. So I'm not talking about Google, Apple, who utilize those products and services to have a better impact because they're such a large company. One of the issues that we've had and I think we incubated this fund for maybe about 4 or 5 years, but in the early days of, ESG conversations with investors, it was always like, how do you measure this? How do you measure that you're doing a better job than your benchmark, than your peer funds? And in the beginning, it was sort of like, well, here's MSCI, here's Sustainalytics, like, they have good scores in these companies, like we should be good. But then that you peel back the onion, and that really did not suffice. So the approach we took was we used SASB, which is the Sustainability Accounting Standards Board, which is the basically sustainability version of FASB, and we utilize 8 metrics where we look across climate, land, air, and water impacts. And we look at this for every single company, upstream, downstream, in ag, in energy efficiency, any kind of company that we think, is feasible to invest in. And we make sure that cumulative, weighted average is better than our benchmark, is better than our peers. On top of that, and it's equally important, of course, is the fact that we're obviously striving to deliver returns, which albeit has been a little bit of a tough stretch this past 6 months. But, with all that said, I think, in terms of the conversations we're having with investors, 70 to 80% has been on green metals. It's just been such a strong interest. It's been a lot of education because a lot of investors who have stepped out of energy, have stepped out of, utilities for a while during the growth phase, kind of look at this precipitous run up in prices, and they're sort of like, whoa, is this really sustainable? And we have to kind of back into it and be like, look, nat gas uses X amount of, minerals and metals. And then if you look at offshore wind, it's 15X that. If you look at EV, it's 5X the amount of, metals you see in ICE. So we kind of have to put all that math out there, and eventually it sort of starts to make sense that we are going to be critically at an undersupply of these materials in order to advance energy transition. COP26 was sort of like the big, it was a big call to get the entire global stage excited about energy transition. But I think the war really was very sobering. And that kind of made it very, very, very clear that all of European, legislation that called for developments in the next 10 years need to be pulled forward to the first 3 to 5. So, it's been a whirlwind of a lot of different, ups and downs. But ultimately, there feels like some sort of sticking to some of these investments and trends that we're seeing.
Yeah, it sounds like a huge educational piece really around the investors and where they need to be consciously putting their capital.
Right, yep. Definitely. I mean, a lot of the conversations we had in the past was why are you in EMPs? Why are you in, mining? These are big cash flow businesses and, they don't really deliver growth. And now the conversation has spun entirely the opposite way. And now what we care about in terms of looking at all these companies is of course, volume and operations, but sustainability, which means their tangible metrics on how well they're delivering in terms of a footprint on the environment, but also security of supply. And that's a big one, especially as we're moving towards, nearshoring, and people are looking at different destinations for processing, for extraction, right? So all of these things are coming into, a lens where previously it was okay that China kind of dominated all this. But then with all the supply chain issues we've had over the past 2 years, it became very, very vividly clear that we need to have, security of supply. So it's been a lot of education too. Yeah.
Yep. And just one question within your sort of the way you analyze companies and businesses, within those sustainability, that assessment of what's sustainable, are you, say, more not forgiving or lenient, but are you more accepting of a mining company or someone who's in industrials that has to have some kind of carbon output or sort of a negative impact of the processing that they do, rather than, say, someone who's working in an AI technology that's improving efficiencies within grid, for instance? It doesn't have an immediate pollution or impact in that respect. How do you sort of differentiate within your fund between the sort of heavier industrial type businesses from those others? Because they are, of course, essential to the whole pie.
Right. So we look at this first and foremost on, company specific returns. If we find more upside in one company in energy efficiency versus a mining company, we'll go with that one. But we'll weight it in a way that makes sense. Everything's sort of very balanced in that sense. When it comes to the sort of operational and, environmental footprint of some of these things, we look at it versus peers, and we also look at it in the next 2 years worth in terms of progress. For example, if there are stated progress, and goals to be able to improve your wastewater and improve your, let's say materials handling or carbon footprint within the next 2 years, and there's operational, bullets that you are able to actually execute, then that's something that gives us a lot of comfort. And in terms of, the upside that we see in the stock, if we think that, it's something that, is very feasibly valuated. And of course, we have a very bullish outlook towards some of these industries in general, then, we'll also weight it accordingly. But there's no perfect science to this.
Yeah, indeed. Excellent. Okay. Well, we touched on wind and renewables and solar. We've done EVs quite a lot. Let's focus on the renewables element and some of the potential hurdles, I suppose, in terms of let's keep it US centric. Where's the US doing well, and where's it perhaps not doing so well with a rollout of renewables strategy, either in replace of hydrocarbons or at least to complement existing energy grid? I'm sure it's quite fragmented, but it'd be great to get the panel's views here. And then maybe we can talk about the stationary storage piece as well, which is obviously going to unlock more potential there. Does anyone want to sort of touch on the renewables piece?
Yeah, well, so with regard to renewables, the government really sucks because honestly, it gives us so much volatility when you have an end goal and you know that there needs to be X number of gigawatts that are installed, and then AD/CVD comes in. I can get on a soapbox and talk about this forever. It really gets me upset. But AD/CVD basically comes in here and it kind of disrupts the entire process. And then yesterday, the government, Biden announced that he's rolling back these tariffs to make them retroactive, but apply 2 years later. So it's a smorgasbord of policies that kind of speak against each other. The biggest, I think, pain to true renewables adoption, aside from government, is the grid. And Kimberly, I know you touched on this earlier, but obviously the grid has, I think, American engineers rated it at like a D+ or something like that. It's 40.
C-.
C-. Okay. Well,
it went up.
Oh, it went up. Good. Yeah. But, ultimately you have this, sort of two-way move of electrons. The grid is not obviously prepared for that. And you have so much more of that because of solar, because of storage. Yep. One of the positive aspects I'm actually seeing right now is because the utilities sector has, sort of just been this boring sector, not a ton of investments. There's a couple of names out there that basically started growing more solar, growing more wind. And when you see growth, revenue growth, in addition to margin growth, that's something that gets investors excited. So what happens there? Then utilities invest in more solar, more wind, but ultimately they also have to upgrade their transmission lines to actually support their assets. right? And then that is a sort of fortuitous cycle that kind of, helps both the companies and their shareholders and the actual assets itself.
So one of the things I'd like to add is, 3 weeks ago, I was in Miami at the American Gas Association. I was shadowing one of our utilities analysts because I've been reading about all this stuff. And he's like, you gotta come and talk to these guys. Not one person talked about federal government policy. So going back to an earlier point, 88% of the utilities are privately owned. This is very different than any other market in the world. So if you take that into account, that basically the utilities, they have a rate that they have to abide by, and they have to manage their assets within. If you're in a regulated market, if you're in a deregulated market, that's a whole different story. But all they did was talk about state policy and what was the state policies in their service area. That's all. So that was really eye-opening to me. So when we talk about the Biden's infrastructure policy and all that stuff, well, that fund can only help hydro because that's the assets that they own. So when you have all of these policy directives, it really does get convoluted really, really fast.
Yeah, and to add to your earlier point about, how the states are sort of deciding the EV adoption, one of Biden's biggest policy pushes has been EV infrastructure, charging. How does that happen on a state level?
The state has to want it.
So
if the state doesn't want it, it's not gonna happen. And, we've talked at that particular conference, there was the head of energy for Mississippi, for example. And he's talking about there's just no room to add on renewables. They have to deal with what they have. They don't have the tax base to facilitate that. And so when there's so just to give you an example is, when you talk about infrastructure policy, only 25% comes from the federal government. Right. And it's usually in the form of grants. The state has to actually match those funds. So when you have a poor state that has low net national income and has some serious infrastructure problems, they have to be able to match to get those funds. And so there's this convoluted web of having the state having their policy and deciding what's a priority, and also having to match funds with the federal government in order to get that, and they have to apply for grants. And so another comment was that, I'm in this service area. Illinois does a really good job of managing, the federal government and the FERC rules. And I'm going, okay, well, but how about Indiana? Well, Indiana is okay, but they don't do as well. But we can actually hedge our commodities in that state. And I'm just like, okay, this is you got to really look at the state regulations.
If I could comment briefly, Adam, on the industry side, I'm extremely constructive on the private sector. I think entrepreneurs have the ability to scale and maneuver around policy a lot better, and don't need to be complacent and wait for government regulations to change, because the cost of solar right now is so compelling at $100 oil that if I could speak from an industry side, there's more than 10 mines in the last 2 quarters that have announced they're going to be supplying over 50% of their total mine site energy through renewables, and that they don't require any government incentives or compensation to start making these decisions and investments, because they're extremely compelling at current oil prices. And I suspect this shift to sustain. From an exploration company standpoint, we're also looking at working with a company in Canada that's innovating in this space. We may actually be able to run our exploration programs fully with electric equipment and using battery storage as well. So I'm quite hopeful and constructive on the private sector to scale here a lot faster and nimbler than requiring government intervention.
Yep.
Absolutely, and you never underestimate American innovation.
Yep. Indeed. And this is, increasingly more of a requirement, Adam, for when you're talking to, your investors, and people are saying, how are you going to develop your mine? What are your, what sustainable practices are you going to put in place? Solar, wind, etc.
That's a great question, Adam. I mean, I would love to be in a position to to be near term developing a mine. But I think what's important now is you need to be thinking further upstream about the total impacts of this mine, but energy sources. And we're taking a look at projects that have a good exposure to hydroelectric capacity, which I think is not too dissimilar to other members on this panel that are involved in the industry, is looking at that the key energy input and making sure that's renewable. It's a great starting point to have that low carbon footprint from the outset. So yeah, hope to come back to another one-to-one conference and be able to update this group on how we're looking at building mines with a net zero carbon footprint. But yes, it's certainly an area we need to innovate in as an industry to gain social license to operate.
Yeah, indeed. Okay, so could we talk about energy storage and just some of the challenges around, or indeed innovations, and where that's scaling quickly, and how essential that is, whether it's vanadium redox flow batteries, etc., and where that sits within the puzzle of what we've been talking about. Does anyone want to tackle that?
Just a little bit on that. Especially in a world that's still shying away from nuclear as the baseload solution, with renewables oscillating on top, as we were chatting about earlier. We definitely need a lot of ESS to be installed around our grids and localized in energy intense type of operations, such as the mines or the conversion plants. The advantage is that, over their size doesn't matter so much in weight. So you can go with LFP and lithium carbonate. Once the economics of the vanadium redox, which is the main issue these days, it's the volatility of the price. So there are some companies that are working on ways to sort of rent the electrolyte to the power and to the utility, or to the owner of the project. So this could help a little bit with that. There are zinc oxide solutions. So there's sort of a multitude of approaches to that, but we will need definitely energy storage. And this is another thing, when we do our aggregate demands and try to see how the supply side will respond to that. We're not just talking about EVs and electromobility. There's a huge chunk of the demand that's going to come from ESS.
Absolutely, and it's not just batteries. Batteries, they have temperature issues. They don't work well in heat. They don't work well in, they get damaged in heat. And obviously in cold weather, it's pretty much well known. But we've also been doing a lot of work in hydrogen, and, there's a lot, again, the Air Products, for example, is building a facility in Louisiana. And why is that important, and why am I excited about it, is that, in Texas, all of the waste from the oil refineries, they're actually going to be that's going to be the feedstock. So instead of going into the ground and instead of being disposed, it's going to be turned into hydrogen fuel for inputs for their chemicals business. And I'm just like, this is how companies are thinking now. They're thinking about creating circular economies and taking the reins of their own supply chain and finding ways to get rid of waste, get rid of bio waste, get rid of like all of these things that are right there. And so you've got, instead of shipping out your waste, you're actually going to make a fuel out of it. You're going to make a chemical input out of it. So this is very, very exciting time on that front as well.
I agree with what Kimberly is saying, and I think that there are. This to some extent it also goes to to sort of the trust issues between the general population and the extractive industries and in mining in general. We do need to become more circular. We do need, and again, it's a multifaceted approach. If you need sulfur, copper guys, then have your own sulfur plant and produce your own electricity. If you're generating, all kinds of fines and byproducts in the ferro industry, then, we invested in a company that reagglomerates them and puts them back into the cycle. So it's a closed circle. We have decades and decades of tailing mountains and ponds, and that do have economic value, and with the right stimuli can go into the money. Doing all these things in a visible way, and really demonstrating that that mining in the 21st century is not what it was, and that the image is wrong, and we do need these materials, and without these materials we'll never transition. So everything has there's cause and effect on everything. It just is what it is. You can't do anything without influencing and creating some sort of a chain reaction, but you can, in a circular way, make it as positive and constructive as possible. And there's a lot that can be done. And I think that everyone in this industry and in the conversion industry should start thinking about the new ways of making the old things. As hydromet can to some extent substitute pyromet, and hydrogen as the energy source for smelting makes a huge difference. And totally green energy as a byproduct is fantastic. Green hydrogen, I mean, but in some areas where you have very cheap hydropower, what's wrong with cracking the water through electrolysis and generating the hydrogen, which will then feed the smelters? So there's a lot that can be done in that respect, and I'm optimistic. I see people are actually moving in that direction. At least a lot of smart people are thinking about it. Yeah, hopefully they'll get the incentives that they need to commercialize.
It's funny because when I started looking at hydrogen about a couple of years ago, it was always about heavy duty transport, right? And it absolutely is a possibility on that, but it was where's the infrastructure? And then all of a sudden people from like companies like Air Products and the chemicals business were all of a sudden saying, well, we can use it. We can decarbonize. We can lower our carbon footprint by incorporating electrolysis on site. And so that electrolysis, by the way, requires PGMs. So, and copper and aluminum for transmission lines so, anything that you think about on the technology is going to need some sort of mining input. That's something that just needs to be addressed and needs to be the image that we were talking about. It has to change, and that realization has to happen.
Adam, that's super. If I could comment quickly, Adam, I think just from an industry standpoint as well, yes, in urban settings and with a distributed energy sort of network, it's really important to have energy dense storage solutions. But one area I'm watching very closely is pumped hydro, especially for potentially at post-use at mine sites. You have a lot of storage capacity at surface and large open pits. You could create a really nice loop there that you may store massive amounts of energy and be closer to where some of the mass baseload generating assets are. So interesting space to watch as well.
Yep. Fascinating. Well, look, we're just about out of time, but if you want to grab the panelists for a chat and ask any questions afterwards, please do. There we have it. Lots of challenges ahead. Don't trust the federal government to get much done, but trust in the innovation of the private sector. So thank you very much to my panel.
Thank you.